Okay, good. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Sentiment team and community members get around and discuss recent crypto market events from a fundamental perspective. Now, the way we do that is by combining a lot of different data sources, including on chain social media and development information, to help you better understand what's going on within the crypto market and how different crypto market participants are behaving and how that behavior is impacting the price of relevant coins. So I suggest checking out sentiment.net after or during the call if you like what you hear, and also joining our Discord. The link is going to be in the description of this video. If you don't want to wait until next Friday to talk about these types of topics, we talk about trading strategies, valuation models, on-chain and social data every day in our trading channel. So be sure to check out the link to our Discord and join our community. So there's a lot of stuff that we want to go over today. So I'm just gonna give it off to Brian. So Brian, feel free to jump into our metrics whenever you're ready.
You bet. Thanks, Dino. So for those of you who don't know, we are currently looking at the graphs.santiment.net/social platform here, which is basically the home base for anything related to the sentiment metrics for any asset. You can go here, basically browse our entire library of assets we cover, as well as look through the different sources. Currently, we're looking at the last year of sentiment metrics related to Bitcoin on Twitter. And each interval here is 1 day. What we're looking at right now is the positive versus negative sentiment of all of the keywords that we track, and we have assigned to being either a positive or negative word. And looking at how they have fluctuated over time, you can see that back in July 2019, when things were really getting toppy and we got up to about 13, even 14K on a few exchanges, that's when positive sentiment obviously was soaring. But you can see that there's a bit of a lag in when positive sentiment tends to top. And what we're seeing now is kind of a similar thing. Right after our actual top, which was actually right above 10K, that's when we had positive sentiment spike about a day or two afterwards. And now positive sentiment is starting to sink as we retrace down to the high 8Ks and now in the low 9Ks, while negative sentiment actually went up at about the same time, and it's decreasing along with positive, showing that there's just an overall less amount of keywords being mentioned. So the volume is down overall on Twitter, but it's sinking a lot less than positive right now. And it's reflected even better when we go down to our sentiment volume consumed metric, which is sentiment balance multiplied by unique social volume. So what this is actually showing is the amount of volume being shown as well as the positive versus negative. So right now, anything above 0, which we're still at just barely, means that overall Twitter is positive, but it's sunk significantly from what was actually the 2-year high. This was a 2-year high of positive versus negative sentiment volume consumed here. So right now, because of this retrace, and actually you could have predicted this prior to the top happening, because it was already starting to fall off right when we got up to the high 9,000s. After the top happened, that's when we really sunk down to almost back to even. So this is really important, because what you can see if you're tracking this on a day-by-day basis is when sentiment starts to come down, that's usually a sign here that the top is imminent. And we saw kind of the same thing this first run up here back in July, which we showed back up here. When these very high levels of sentiment start to fall, that tends to be when the tops are in, and we had sort of a double top here, and now we're seeing sort of a single top followed by this lower double top, but we didn't get the high sentiment this time around. Generally, when you start to get to levels like this at about negative 0.5, that's when it starts to look like a really good buy time. And right now we're kind of more in a hold time more than anything. We don't necessarily show signs of selling from this metric, but we also don't show signs that it's time to buy, because we're kind of in neutral territory right now. And I'm also going to show Telegram. And I know that Dino here has been studying Telegram's sentiment metrics. So if he'd like to jump in really quick and discuss that while I show along on my screen. That might be the best way to do this.
Sure, it's a similar story. It's just that the sentiment on Telegram is a bit more bearish at the moment than Telegram. And if you go all the way down to the same metric sentiment volume consumed, you can see, yeah, that it's currently over the last week or so. It has been declining at a rapid pace. It's currently well below average. So the overall predominant sentiment on Telegram is fairly bearish. And if you look at the previous times that this was bearish, at least over the last maybe 6 months or so, um, it has often, kind of correlated with the local bottom. So here, obviously, during the, Black Thursday drop, and then there were several smaller bottoms. So January 23rd, and then the one before that, I think, yeah, it was November 25th, and the one before that somewhere in August, I think, as well. Yeah,
September, yeah.
September 26th. So these sort of extreme levels of negative sentiment, especially when they correlate with a strong price retractions, can sometimes indicate a local bottom, and as a result a bounce back for the coin in question. And speaking of bounce backs, we've seen the mentions of the word bounce back actually spike extremely over the last 24 hours. So Brian, if you want to go over our go to our social trends metric, you'll see that I think bounce is the third biggest social gainer on crypto social media. There we go. Over the last 24 hours. So basically what you're seeing now, guys, is based on the data that we have collected from over 1,000 different crypto social media channels. We have calculated a list, or we calculate a list every hour of the top 10 words that are gaining the most sort of ground and most social mentions on crypto social media. So bounce is currently very high up on people's minds. I think if you look at the last month, Brian, is that the 3 month or last month?
Yep, now in the last month.
So there you go. If you look at the last month, you'll see some interesting sort of historical patterns as well, right? So the previous times that we saw these spikes in the mentions of bounce, the crowd actually seems to have been quite on point. So going back to, what's that, April, maybe May 1st or something. Yeah, April
Yep,
30th,
April
there was,
30th and
yeah,
then May 3rd.
the May 3rd, and then May 9th, I think the drop. Yeah, there we go. So all of these local bottoms were earmarked by spikes, relevant spikes in the mentions of bounce. And so far, the history seems to have repeated itself once more. So we saw, yesterday evening around the time that Bitcoin started retesting the 9K level, we saw the elevated mentions of bounce. So far, I think the biggest within the last month. And since then, Bitcoin started to consolidate a little bit and is now on a rise once again. So this is an interesting way to just analyze the social data coming from crypto-specific relevant social media channels to see what the crowd is talking about, and historically what these levels of certain words and mentions of certain words, how they have impacted the coin's price in the past. So far, it seems like we have reached the local bottom. And if you look at the previous times that we saw bonds being mentioned at a high clip, it's usually led to a short-term rally at the very least. So just based on social data at the moment, I would be fairly optimistic about Bitcoin's short-term price action over the next couple of days.
Yeah, very interesting. This definitely looks to be one of those keywords that often as one of those self-fulfilling prophecy keywords where when you start seeing high mentions of it, it sort of creates a rally on social media for people to actually buy because everyone says that there's going to be a bounce, and the FOMOers tend to actually make it come to fruition. Sometimes they last for a while, sometimes they don't, but based on the previous month of data, we've seen some pretty significant bounces based on this keyword. So very cool. All right, I'm going to next show our daily active address divergence chart. So this is the homepage for our Sandbase Pro members who come and see our DAA divergence sand sheets template. And what we see on this chart are the last 3 days, the most previous being black, yesterday being dark gray, and the day before that in light gray. So each of these shows what the divergence is between their daily active addresses being produced on their respective networks and the actual price. And we have a few in the green, but most are actually looking a little bearish right now. The most important right now, obviously, would be Bitcoin. And I'm going to show you what we're seeing most recently. Right about, it looks like about a week ago, we hit a bearish signal. And these signals only fire off when it exceeds about 0.25 of the divergence right now. So we saw that about a week ago, and that almost perfectly coincided with the top. It was in the high 9,000s. It actually got up to about like a close of about 9,900 a few days later. But more or less, as soon as we hit this bearish signal, that's when things started to fall off. And more often than not, I mean, if you look recently, ever since Black Thursday, this this template has been very accurate at predicting where prices are going to go. Obviously, the big bunches of signals are going to be the most important, and we got a flurry of them right when Black Thursday happened. The price bounced. Then we had a minor retrace right when this group of bearish signals showed that the daily active addresses were not keeping up with that price rise. And then as soon as we hit that bottom, what do you know? We hit another bullish signal showing that we were getting an abundance of daily active addresses. And then we were sort of in neutral territory up here as I believe FOMO started to kick in between 8K and 10K. And then right when we got around those high 9Ks, low 10Ks, that's when the bearish signal hit. Now, obviously, there's only been one, and this is most reliable when we have big bunches like this or like this. But right now, we are just about to finish that window of about 10 days that we've pre-programmed. Anytime there's a signal threshold that's crossed, and we're going to be back in neutral territory. So we're going to see and watch very closely where the next signal indicates we're going. And if you look at daily active addresses on our sand base, you can see it more or less reflect what we saw in the divergence chart, which is a rise over the past 3 months of DAA. Obviously, the big Black Thursday event occurred here, and that's when we had a very large daily active address bar show. We saw a big climb here, and then we had our top here, which was actually the biggest daily active address bar of any over the past 3 months. And now we're seeing a bit of a slight decline. Even though price tried to make another run at 10K, it wasn't able to do so. And the daily active addresses is one of the biggest contributors to prices being able to rise or fall. And right now, we saw over the past 2 weeks kind of a decline in DAA while price was trying to stay high, meaning there was a bearish divergence there. So right now, we're back kind of in neutral because DAA is trying to stay up high. And this next week is going to be very key to see if we can actually maintain these 9K levels. Personally, I believe that'll happen. And Dino, when he goes into his sections more, he'll explain why there are some bullish signs showing right now, and we could see a good bounce. But DAA is going to be a great thing to keep an eye on for everyone. Moving on to NVT here. So I'll make this section quick. Basically, we are in semi-bullish territory for the month of May still, despite the volatility, despite the bounces between the 8Ks and over 10K at one point. We are getting healthy token circulation, particularly in the last couple days. These hash marks here resemble where they are compared to the average of the month. And the last couple days have been below the needed amount of token circulation, which actually means it's above. So NVT works in reverse. The lower the bar is, the more bullish things are. So these signals are showing we're getting very healthy amounts of token circulation over the past couple of days, even though last week, just as we saw in the DAA divergence chart, we were not getting very good activity on the network, and that was reflecting in our NVT chart as well. And last week, it was actually showing as a neutral signal. So because of the last couple of days being so bullish, we're back in semi-bullish territory for the month of May. And overall, we are up compared to the close of the end of April at 8,600. We're now at 9,500. So things are looking pretty good here. And I I personally believe very strongly in this kind of chart. If you look over time, things have been fairly accurately drawn out based on what the signals are showing between the bearish, semi-bearish, neutral, semi-bullish, and bullish signals out there. So something to keep an eye on. If you're a Sandbase Pro member, please feel free to contact us and let us know you'd like access to this chart.
So essentially, Brian, what you're saying with both of these templates, right, is the fact that the price of Bitcoin has declined quite a bit in the last 48 hours, but the amount of on-chain activity has stayed fairly consistent. So both in terms of
Exactly.
the actual amount of addresses that are interacting with the coin, meaning either sending or receiving Bitcoin, as well as the pure token circulation, meaning the amount of tokens that are actually being transferred or the amount of value, so to speak, that is being transferred on the network. Both of these
Yep.
indicators have stayed fairly consistent, have not reacted to the price in a declining manner, which, according to these models, is a fairly positive sign for the coin's short-term price action, right?
That's exactly right. Yeah,
Mm-hmm.
1 to 2 weeks ago, it was showing that there was starting to be a slowdown on these two key metrics, daily active addresses and token circulation. But over the past couple days, things are starting to even back out as we hit that high 8K, low 9K level. And things started to normalize again and starting to look a little semi-bullish again, at least on this one. On the DAA one, it's a little more neutral at the moment. But yeah, there are some signs that this bounce can come to fruition. And I could definitely see that happening over the next week based on two of our best leading indicators here.
Mm-hmm. Yep, definitely.
All right, last thing I'm going to show. OMG obviously has been in the news a lot over the past week with the announcement that it would be on Coinbase Pro about a week ago, and that actually coming to fruition as of, well, the last 48 hours or so. It's been kind of a gradual integration. I know they actually put it up, and then as of yesterday, you could actually trade it. So all of this being said, we are getting a ridiculous amount of social volume. People are talking about it everywhere. It's up over 300% or so in the past month and a half. I don't know the exact time interval, but it's a massive percentage increase, especially since Black Thursday, where price actually hit about 50 cents. Now it's up to 173, which is absolutely insane. So social volume, very high. It's actually, this is looking like a spike to me. I mean, it's so far much higher than everything else that I can see that this social volume will be sustained in the upcoming days. So that being said, when crowds talk about an asset at a um, sharply rising increase like it is right now, that can be a very telltale sign that a top is in. Now, whether it's a long-term top or not, that will be seen more in the next couple of weeks if we see sort of a bounce in social volume as prices start to decline or not. But a local top almost certainly is in based on just social volume alone. And when we add a few other metrics like token age consumed, that even further validates this, because token age consumed is primarily used as an indicator for sentiment shift. And it's usually unintentional by the crowd, but when a crowd shifts too far in one direction for an asset, whether too bearish or too bullish, it generally is a sign that a sentiment shift is occurring. And right now, we've had our largest token age consumed spike, not just in the past 6 months, that is, but I think in the last couple of years for OMG. And this is definitely a telltale sign that prices will be turning soon, maybe not immediately, but if it doesn't happen in the next couple of days, or at least the next week, I would be very, very shocked.
Yeah, if you look at exchange inflow, it's the same damn thing. Every metric is at its 1 year or all-time high at the moment. It's quite impressive. Not necessarily in a very good way for the price of OMG, but certainly the move to or the listing on Coinbase seems to have kind of rippled through the system over the last week or so. Every single metric is reaching critical point. Yeah, it's there you go. It's right up
There it
there.
is. There we go.
Yeah. So if you
So
look
if we
at
go
the
down, yep.
I mean, yeah, so that's what you're seeing now is the amount of actual OMG tokens entering centralized exchange wallets. And this is even without Coinbase wallets being included in this particular metric. So this is just the, other exchanges that are listing OMG. There's a lot, like over 4.19 million, which at these prices I think is around $4.5 million entering exchange wallets over the last 24 hours. So I actually wrote an
Hmm.
article about OMG 2 days ago, I think, when it first started trending on our emerging social trends about this very phenomenon. So these were, even 2 days ago, there were very strong signs that the OMG price is going to soon kind of go back to earth. And I was saying at the somewhere near the end of the article that, when you see these, daily active addresses, social volume, all of these sort of metrics start going back to earth, that's when you're probably going to see a very strong correction. So far, all of these articles or all of these metrics have even, charted a higher high. So, for example, here I thought, okay, this combined with the fact that we saw OMG being the second biggest word on our social trends, combined with the fact that we saw this massive spike in tokenage consumed, all of these were pretty telltale signs of a short-term top. And it was maybe there was a slight correction, but since then it's skyrocketed even higher. So that makes me a bit less optimistic or a bit less confident of calling this a very top. But there's no way, I think, just based on historical precedent, there's no way that OMG is able to sustain this type of attention and network activity over the next week or so. So the moment that you see maybe 1 or 2 days with a strong decline in network activity, social activity, trading volume as well, I think that's when you're going to see the price of OMG really start going back to earth. For now, if you look at our social trends, I think OMG is currently like, word number one on there or something like that, which is usually a very bearish signal because we've even done some, yeah, there you go, it's number one. So we've done even some analysis on or backtest on this phenomenon where when you see coin tickers end up on our list of emerging trends, which means that they are one of the most popular topics on crypto social media. When that happens during a pump, it usually leads to a short-term correction over the next couple of weeks. I think on a sample size of over 200 coins that we have, kind of tested this phenomenon on over the next 12 days, their price has dropped by an average of 9% since the moment that they ended up in the top three words on our list. So it's not looking good for OMG. Just based on the extreme values of pretty much all of the metrics that we track for the coin.
Very interesting. Yeah, I didn't even know about that 9% metric, but the fact that we can actually quantify how much a price will retract if it enters the top three while it's on a bounce, it's pretty amazing.
So
And
if you go
the
back
fact that
to the
OMG over the past
insights,
3 hours,
yeah, if you go
yeah,
back to the insight that I wrote, I shared the chart based on that test is based off of. Let's see, bit slower. There we go. So this is the results of our backtest on 198 different events. So an event here is the appearance of a coin sticker or name within the top three words on our emerging trends list. So this is 0 on this chart, and then minus 14 is 14 days prior to the appearance of the coin on our list, and then 12 days later is obviously what happens to the coin. So the graph is the average price of a coin within the 2 weeks before and after it has showed up on our list. So you can see 14 days prior or 2 weeks prior, it's really just starting to ramp up slowly. In the 2 or 3 days before the coins actually appears on our list, there's a huge pump, and this is usually where the biggest gain for the coin happens. 2 or 3 days before it shows up on our list of emerging trends, or before basically everybody in the crypto community starts talking about it, and then in the next 2 weeks, you can see a very confident decline in the price of a coin. And so, if you look at the y-axis, you can see that it's over the next 2 weeks, the average drop in the price of the coins that we have analyzed is 9%, minus 0.09. So that's equals to 9%. So this is what we've seen happen almost 200 times. So I would be very surprised if OMG was able to buck this trend, especially because not only is its social data very high, social volume very high, pretty much all of its other on-chain metrics are extremely high and extremely bearish.
Yeah, sample size of 200 coins is definitely enough to actually make this a legitimate study, in my opinion. And just so the viewers know, and apologies if you're not positive on this, Dino, but is this basically a study for anywhere an asset falls in the top 10, or is it
No, just the
specifically like
top three.
top three? Okay, so it needs to be within the top three, which OMG is clearly over the
Yeah.
last 3 hours. It's dominated the #1 spot. Um, it will fall an average of about 9%.
Exactly. Yeah. So when the coin becomes one of the biggest talking points on crypto social media, especially if this is happening during a pump, which is usually when it's happening, this is the aftermath. The aftermath is very usually a very strong retraction. So over almost 10% of the price is lost. The value of the coin is lost within the next 2 weeks. So we'll see what happens. Like, let's revisit OMG's price action in the next 2 weeks and see whether this event study proves to be successful once again.
Yeah, that's amazing. It's super cool to see it this way, and I definitely recommend people check out this article here. Last thing on my end, I lied. I have one more thing. Just want to show what the price returns are looking like right now over the last 3 days, 30 days, and 90 days. Beginning with the 90-day chart, just to give you guys some perspective, most projects are still in the red after Black Thursday occurred, including Bitcoin by just a hair. Bitcoin is still down a little over a little over 5% over that span. So since February 22nd or so is when this data is pulled. I think something around 80% of projects are in the red still. If you go to 30 days, completely different story. Almost everything is in the green outside of about 8 projects. So you can clearly see Hyperion has been absolutely soaring, not really getting much attention because maybe not a lot of people believe in it. Electronium, Solve here, which Gary actually discussed in a recent article, and a few others. OmiseGo, obviously, up about 200% in the last 30 days. Theta, 0x had its big run about a week or two ago, and Digibyte. So a few that are standing out, but Bitcoin is up about 28.5% itself, and most are kind of vaguely in the green over the past month. If you go to the very short term over the past 3 days, Bitcoin has actually been retracing down about 6%. A few of them, like Electronium, obviously, when you're trying to invest in ones that have been up a lot over the last month, you'll notice that over short periods of time, they'll obviously be the biggest losers as well because they're so volatile. So that's something interesting as well. If anyone would like access to this chart, please feel free to let me know, and I'll gladly do so as long as you're a Sandbase Pro member. And all of that being said, I'm going to wrap up my section here and hand it over to Dino.
Thanks. Thanks a lot, Brian, for everything you shared. I think we should keep the ball rolling with Gary because you already mentioned Sol's kind of big pump over the last week or so. We have written an article about Solve and its rally a few days ago. Gary has done some extensive analysis on it. So, Gary, if you want to share your screen and kind of give us your thoughts about what prompted Solve's, I think almost, is it like 80% pump? It's something crazy like that. So, what might have been the reason? And what might happen, in the next couple of days based on your analysis?
Yes, thank you, Dino. This coin I'd like to cover has not yet appeared in emerging trends list, like fabulous, profitable OMG. So a few weeks ago, Tikativari from Coin Beach Confidential released a list of 6 coins, buy signals for these six profitable coins. One of these is Solve. Actually, all of them are covered on sites as separate articles, and I wanted to look deeper at Solve. So what I wanted to find out, is it worth jumping into this coin, buying this coin 2 weeks after this announcement, after this buy signal was released? So what can we see here? After Tika released this list, Solve gained almost x2, almost 100% gains. Quite impressive. And I wanted to look at, first of all, volumes, trading volume, transaction volume, and daily active addresses for this coin. And as you can see here, there is quite significant divergence in volumes trends and price trends. It usually means the coin is quite toppish, and the price action will be unlikely to sustain, and price may drop. At this moment of writing this insight, these were one of reasons I considered Solve quite toppish. Another point I looked is MVRV, and MVRV for Solve is in extremely overbought area, like almost all time bound MVRV amounts are in positive area and quite insane amounts. So Solve really looked yesterday and a few days before very overbought. But today the picture has changed, because this is the actual charts, and we can see here that Solve draw another heights in transaction volume, in daily active addresses, and trading volume, which means the trend is quite powerful and it still has a chance to continue upwards. So it's nice to watch these volumes next days and on-chain data. That's it.
Gary, can you also show us exchange inflow for Solve, just so we can see what the sell pressure is like, just based on-chain data for Solve specific? Okay, yeah, well, there's a huge spike in exchange inflow today. Is that today or that's yesterday? It's actually yesterday, right?
Yeah, and also we can see quite big amounts of deposits to exchanges.
Yeah, and it correlated with the dump, right? So this is something that I think we see quite often, is that when this huge amount of coins enters exchanges, it usually, the sell pressure itself proves sometimes too difficult for bulls to absorb, and if it does, then you'll see a picture of Solve over the last 24 hours. You'll see just a very strong retraction, because people are basically looking to take advantage of the pump, moving their coins to exchanges, selling millions worth of Solve, which can only lead to a downfall in price if the bulls are not able to respond.
Absolutely, yes.
Cool. Thanks a lot, Gary. Thanks for sharing. So you guys can check out Gary's article on Solve on insights.santiment.net. It's a great sort of view of a coin that we know has pumped for a very specific reason, and the impact of a pump group on a specific coin is fascinating, to say the least. It's not only, we have covered all of the Tika's picks, including I think 5 other coins. So if you want to see exactly what Tika's shout out does to a coin, and how we think that they're going to do over the next couple of weeks, be sure to go to insights.santiment.net and read our analysis on all of them. So I just wanted to end we are pretty much nearing our end time. I just wanted to end on a few additional interesting things that I spotted with Bitcoin specifically over the past couple of days. So the first one is, one of my favorite sort of correlations just to keep a track of, and this is the amount of specific stable coins moving to exchanges and how this correlates to the price of Bitcoin specifically. So here we're looking at this is last month, right? I think it's better to look at last month because yeah, the Black Thursday dump just messes everything up. It's just too big of a spike to really be able to accurately show what's going on. So let's go back to the last month. There we go. And first of all, let's actually cancel the BUSD. So what you're seeing in brown is the amount of tether, specifically ERC20 tether, that is entering exchange wallets, centralized exchanges. This is an on-chain indicator that we track for all Ethereum and all ERC20 coins, including stable coins. So the exchange inflow of USDT is plotted against the price of Bitcoin. And here's an interesting event that happened right as Bitcoin was kind of starting to retest the 9K level almost. We saw a massive spike of almost over 50 million USDT, so basically $50 million moving to centralized exchanges. So this is something that we've observed several times in the past here as well as here. Very often when you see these major spikes in stablecoin inflow to exchanges, why are people, just think about the reason why people would be moving massive amounts of stablecoins to exchanges, especially if Bitcoin is dropping. The presumption that I have is that a lot of this is, people looking to buy the dip, which so far seems to have proven to be accurate, just based on the price action of Bitcoin since we have seen it basically start to go into consolidation mode, and then in the last maybe 24 or 12 hours here, we've seen it start rising once again. So when you look at the relationship between the stable coins, especially the stable coins that have strong trading pairs with BTC like USDT and BUSD, and when you see these massive spikes in the amount of stable coins moving to exchanges, especially during a price retraction for Bitcoin, I think it's very often, an opportune time to, well, not necessarily accumulate, but I think it very often earmarks a local bottom for Bitcoin. So once again, I want to show what's been going on with BUSD in terms of exchange inflow, and you'll see it's pretty much the same image, just on a smaller scale. But there you go. So again, we see here, as well as here before this rise, and then as well here at the very beginning of the Bitcoin rally in April, we saw these spikes in the amount of BUSD entering exchanges. I would assume Binance. So this is 5 million BUSD moving to centralized exchanges right as Bitcoin was bottoming out, and since then we've seen sort of a slight move or push upward in the past 24 hours. The final thing that I wanted to show is actually the amount of exchange inflow for Bitcoin specifically, or Bitcoin alone, which is also very interesting. So here at the very bottom for Bitcoin over the last 24 hours, we saw a massive spike of over 7,500 Bitcoin moving to centralized exchanges. However, this has not proven to be a bad sign for Bitcoin. So if you look at sort of historical patterns, these levels of exchange inflow can often indicate, either a strong correction or a local bottom. So here we saw a massive inflow of Bitcoin right at the very top when Bitcoin was testing 9.4K level. So what this is telling to me is that at this time, Bitcoin bulls were unable to absorb this massive sell wall that was all of a sudden occurring for Bitcoin, and therefore we went into a very strong correction in the next couple of days. Now, at this time, at the 8.6K level, so as Bitcoin was kind of entering the 8.5K and below territory, we saw another spike in exchange inflow, which I would assume would be weak hands looking to kind of get away from Bitcoin given the downtrend that has been occurring over the last couple of days. But this time, I think Bitcoin bulls were able to absorb the pressure, and we saw what happened since. It was a massive, 5-day rally for BTC ever since. Now, I think, at least in my opinion, this is a similar pattern that we're seeing occur right here. So the fact that there was a lot of weak hands, it appears, moving their Bitcoin to exchanges as the BTC was kind of retesting 9K level. So far, it has not negatively impacted the price whatsoever. In fact, the price has been growing since. So I would assume that the Bitcoin bulls were similar to this local bottom on May 4th. Were once again able to retort and respond to this elevated sell pressure. And if you look at what's been going on, in these types of occasions in the past, it usually has, had a pretty positive effect on a short-term price for Bitcoin. Obviously, it's a bit too early to tell. I would definitely keep an eye on this metric over the next couple of days as well. Yeah, this is what I think we should close in on today. So I want to thank everybody that joined us during the call, everybody that have kind of showcased their own metrics and their own findings over the last week. Guys, to everybody listening to this live or listening to this after the fact, if you liked what you saw, definitely check out santiment.net. We have over 100 different metrics, both in terms of on-chain, social media, and development information for over 900 different cryptocurrencies, not just Bitcoin and Ethereum, but pretty much, we try to collect data for all of the relevant cryptocurrencies currently in existence. So if you want to be able to do these types of analysis yourself, definitely check out santiment.net. And then if you don't want to wait until next week to talk about these types of things, and if you don't have anybody to talk about these types of things with, join our Discord, because we discuss on-chain social media and development movements from projects pretty much on a daily basis. So the link to our Discord is going to be in the description of this video. We can't wait to have you join us and talk crypto with us on a daily basis. So that's gonna do it for this week's edition of This Week in Crypto. Thank you everyone for joining, everyone for listening, and I'll talk to you in 7 days.
Much appreciated, guys. Have a good one.
Yes, thank you. Bye.